The other big focus today will be Quess Corp, actually. I just want to pull up the Quess Corp stock, and Quess has been buzzing because for a long time that three-way demerger has been in focus. Puneet is joining in with all you need to know about the three-way demerger. You will see the new entity is listing today at 10. Puneet, set it up for us.
Well, thank you for that. So definitely the staffing company is looking to simplify structure as well as unlock value in its couple of companies, and hence there will eventually be 3 listed companies by the end of today. Currently, when you look at the three-way demerger, the first company is, of course, Quess Corp, which has the workforce management business, which will be retained in the existing listed entity. That's the main business of the company, and that has almost 70% of the company's revenue going forward as well. The other one is Digitide. Now, this one is a very interesting business, is into BPM solution as well as something like InsurTech. That business has a very high EBITDA margin, and hence the value unlocking will help this company immensely, as well as the third one, which is Bluspring, involved in facilities management, which is generally a low margin business but drives revenue growth for the company. Now, when you look at the market cap before the company delisted was roughly about 9,000 odd crores. So we're using that, and the share price was also 604 at that time, which was somewhere between mid-April. Currently at 321, of course, has the value of these companies removed, because starting from 15th April, we only have the Quess, which is the main company that is currently having and showing the market cap of almost 4,000 crores. Now, when you look at the cost of shares for the investors, roughly 40%, 42% will be retained by Quess, the other 26% will be by Digitide, and the 32% by Bluspring. Potential market cap, according to our calculations from our colleague Jasmeet Hiral and Sajid, who worked on this immensely, does look at the potential market cap of 3,700 odd crores of Quess, which is similar to what the current value is. Digitide, which I spoke about, the main business of InsurTech and high EBITDA margin, will be roughly about 2,300 crores, and Bluspring currently about 2,800 crores. Finally, in terms of the value and the expected share price, and this has been something, Digitide will be roughly 225 rupees per share, Bluspring will be 91. And the one thing which I will be working out for will be the value of something like a Digitide, which has the higher EBITDA margin. So this is the conversation about Quess Corp. 2 more listings, 2 new companies which will be listed today.
Okay. Thank you for that, Puneet. So Quess in focus. I don't know, Mayuresh, how you feel about, you saw the numbers that came in for Quess last quarter and this demerger. Do you see it as value unlocking for investors?
So it might happen, Tamanna, but again, I think if you probably look at the revenue mix for Quess, rental staffing still dominates. I think it's more than 85%. IT staffing, the overseas business is around 6-7 odd%, and the digital platforms are hardly contributing anything as far as the top line is concerned. And therefore, I think for staffing companies like Quess or global staffing companies itself, the 2 ratios become very, very important, or the associate to core ratios and the collect to pay ratios, which unfortunately had declined, showing some element of stability as we speak. But again, I think the margins overall for the business are in the range of 1.82%. The expectations in terms of revenue growth is higher single digits. And therefore, I think the revenue growth, the margin profile just does not excite.